Prime Minister or the new government has started laying the foundation for the Amrit Kal period of India. It cannot happen like you decide today and Amrit Kal period starts, right? Hi Vikas, hi, good morning. Yeah, you
Good.
are audible.
Yeah, okay. Yeah, you are audible. So, Manojji, first of all, thank you so much. You are the first speaker of the day. And thank you so much for accepting a request. And one of the reasons why we reached out to you and invited you to speak first is that our theme of the event is Bharat Ka Amrit Kaal. And
Mhm.
you have been working on this idea for many years now. And you also
Yeah,
have various strategies, particularly focusing on Bharat Ka Amrit Kaal. And I
yeah.
don't know to what extent I'm right if I can say that your organization has aligned this portfolio with the government of India in terms of focusing on those sectors which is also focused by a government of India. So we're going to deep dive on that. But let me have the privilege of introducing Manoj first. Manoj is the founder of Carnelian Asset Management Company. So both Manoj and Vikas, along with Swati, came together, started this company in 2007. They got the license. Manoj eventually joined in 2019. Correct, Manoj? Uh,
Vikas, let me just correct. We have all together started this entity in 2019, not 2007.
Nice.
2007 to 19 was our journey with Edelweiss, my
Yeah, yeah,
journey.
sure, sure. Yeah.
So,
So I'll talk. So sorry,
2019.
2019. Yeah.
Yeah,
And so before that, yeah, what you rightly said, you spent about more than a decade together working with Vikas also at Edelweiss,
yeah,
set up
yeah,
the entire research team, have been
yeah.
instrumental in terms of setting up their research team, the forensic accounting. You were the first one to come out with this conceptualizing the whole forensic accounting in India. And then, of course, you came together in 19 and started this company. So, first of all, many congratulations to Carnelian Asset Management Company for doing a wonderful job and able
Thank
to
you.
deliver the deliverables in the hand of investors. Thank you. Without
Thank you.
any further ado, I hand over the mic to you and over to you, sir.
Thank you so much, Vikas. Thanks for the introduction and putting all the nice words for us. Thank you so much. And I was just listening to you last part of your presentation, as you were mentioning that the way you select the fund managers, the way you select the PMS and AIF, and the way you have created entire process around that. So, and the same thing which we have adopted from day one, like whatever we do at Carnelian is completely process driven. It takes away human biases, and anybody in the team is free to bring his idea or challenge the other ideas. So that is one of the thing which has helped us getting the new ideas, bringing the new ideas to the table, and over a long term it has also helped us in terms of superior compounding of wealth while avoiding accidents for your investors. In fact, avoiding accidents is as important, in fact more important than creating wealth. So our focus is in both the things. And as you mentioned that the theme of today's event is Bharat Amrit Kal. And incidentally, we have also launched one of our fund basically targeting the Amrit Kal period of India. That
Right.
is, I think, one of the thing. And in fact, this journey, though we have named Amrit Kal right now, this journey has started in 2020 for us when we have launched our first manufacturing and technology focused theme, which is shift strategy, which I think you have also highlighted in one of your slide. The strategy which has delivered 43% CAGR since inception for our investors.
Yeah.
So, in fact, Amrit Kal period, though Prime Minister has put the name to this strategy or to his theme right now, but I think this journey has started almost 8-10 years back. Like when Prime Minister or the new government has started laying the foundation for the Amrit Kal period of India. It cannot happen like you decide today and Amrit Kal period starts, right? So
Sure.
there are immense efforts and immense reforms which has happened. And in fact, once I showcase my deck, I will highlight all those things. So as
Sure.
the name suggests, Bharat Amrit Kal Fund. Amrit Kal is going to be a period
Yeah,
where
Manoj,
India.
can I just interrupt here? Maybe before we start the presentation, if you can throw some more lights on Carnelian Asset Management, how you have set up this whole forensic desk. Maybe you share your experience and then we come to the
Sure.
presentation if you don't mind. Yeah.
Sure, Vikas, sure, sure. So, at Edelweiss, in fact, prior to Edelweiss, I was with Morgan Stanley and I was working in their global valuation and accounting team. And I was responsible for their modelware adjusted EPS. And that time, I think Vikas has called me when he was setting up the cash equities or business at Edelweiss. He has
Okay.
called me to set up the research platform at Edelweiss. And that time, when I came to Edelweiss, one thing which we noticed that the cash equities market or the equities business is already overcrowded, and everybody was covering the same company, writing the same research, and we didn't want to be a 30th guy on the street writing the same research on the same company with buy sell hold recommendation with no differentiation. So what we did, we have first tried to identify what are the missing gaps and what is the dire need of institutional investors who are investing in India. So first
Hmm.
thing which we have noticed that nobody is looking beyond reported numbers. Everybody was so glued on reported numbers, nobody cared that whether there are any accounting tricks, shenanigans being adopted, or whether the balance sheet represents the true and fair picture of the quality of assets, the value of the assets. So we found a huge gap there, and we have created our own forensic desk where we have hired guys from the big four. We got people from ENY, we got people from KPMG, and we have started our forensic desk. And there we have started identifying the gaps between reported and the true adjusted numbers of the company, whether it is balance sheet, cash flow, or income statement. And over a period of last 10, 12 years, like from 2008 to 2019, and all those reports are there in the public domain, we have written reports on various large cap companies, many companies which I can name now because those companies are non-existent. Like we have written reports on Jayaprakash Associates, we have written reports issues with Z, we have written reports on Lanco, Punj Lloyd, and various other companies, which means where the market cap of those companies was at peak at that time, and we have highlighted the gap between reported and adjusted earnings. And our institutional investors who were like taking help of our research, they were immensely benefited by not investing in so-called companies, and that has saved them billions of dollars of their wealth. So that is, I think, just a brief of about forensic which we have done at Edelweiss, and we were like one of the first one to start this forensic research under the name of analysis beyond consensus, which we called as ABC of research. Like even today, if anybody types analysis beyond consensus on Google, he will get like last 10 years of research repositories on the public domain. So
Great.
yeah, Vikas, that's
Okay. So basically, then you picked up some of the learnings from there and also implemented at Carnelian the major learnings.
so
And you and Vikas
abs-
came.
absolutely. So at Carnelian, whatever stocks which comes to our portfolio, it has to undergo with detailed two-layer of forensic deep dive. And we have also created our own proprietary forensic template where which covers all the listed companies in India. What we need to do, we need to just put the ticker of those companies in our forensic template, and in 4 or 5 minutes it will pull out last 10 years of entire publicly available information on those companies, and we will get first level of red flags straight on our screen. And that is a big savior for us in terms of like we get idea what all companies we need to drop at this stage and what all companies we need to put our efforts going forward. And
Correct.
thereafter, each and every company goes through an in-depth forensic deep dive. In fact, because by doing this, it helps us in two ways. It helps us to avoid any kind of unwanted accident, because a permanent loss of capital can happen only on account of two reasons. If you invest in a company with bad quality of management, and second reason, if you invest in a company with a bad business quality, there
True.
cannot be third reason for permanent loss of capital. Even if something, if you buy little bit expensive, there can be a time value correction, but there won't be a permanent loss of capital. So by using this forensic tool, to a great extent, we are able to mitigate this risk for our investors.
Great, great. So now you can run the presentation, sir. Over to
Sure.
you. You have.
Sure, Vikas. So, as was mentioning, that foundation of Amrit Kal period has been laid since 2014, and Amrit Kal represents a period where India is going to travel from a developing nation to a developed nation. And as India moves from a developing nation to developed nation, this period will present immense wealth creation opportunity for investors like us. If you can capture Amrit Kal period of India by investing into right sectors, subsectors, within those subsectors, if you can pick up the right names, which may be small companies right now, but which has potential to grow multifold during Amrit Kal period. And Amrit Kal period is the period which is from 2023 to 2047. But in our presentation, we have broken this period into two parts. One will be 23 to 35, and second will be from 35 to 47. And as it happens with every company, same thing will happen for the nation also. During first 10 years of the Amrit Kal period, there will be a non-linear exponential growth. And once the country achieves a large size, the growth of the country will slowly, gradually graduate to a matured market or a developed nation growth. So, the most important part for the investor is to capture those names quite early, and those names will outgrow even the country's GDP as well as their sector's GDP during the first phase of the Amrit Kal period. So let me just take you through. I will just skip our introduction. I think Vikas has spent good amount of time giving introduction. I will straight away jump to the Amrit Kal period. So Amrit Kal period, we all know India used to be called as Sone ki Chidiya. That was the time in 1700 when India used to command almost 23% share in world GDP. During British regime, that 23% has come down miserably to just 4%, and it stayed there for almost, I would say, last 60, 70 years at the same level, 4-5%. And during Amrit Kal period, what we are saying that India is going to regain its past glory, where we are saying that India's GDP share in the world will grow from 4% back to 16%. What it means? It means that it will be almost 8x kind of growth in India's GDP from around 3 trillion to almost 29 plus trillion. India's per capita GDP will also grow 7x from 2,800 to almost 21,000 $21,000. And as it happens, there will be immense opportunity to participate in the growth of India. And this is exactly what I was mentioning, or was what I was telling to Vikas during our initial conversation, that we are seeing now the the premises above the foundation, but the foundation of India's transformative journey was being laid since 2014. And we have bucketed this transformation in three broad buckets: digital transformation, economic reforms, and infrastructure reforms. In terms of digital transformation, I think India has traveled a lot during last 10 years. Like the kind of digital identity which India, each and every citizen has by way of Aadhaar. Now, means you can use just your thumb or biometrics to withdraw money from your bank account while sitting in the office, while traveling to a village. That kind of digital identity has been created for all the citizens. UPI, which is a payment gateway in India, in fact, it has become a global case study. Many advanced countries like Australia and all, they have expressed their desire that how India has executed this UPI, and these are all, means without taking help of the Western world, India has created on its own. ONDC, we all know, it will be an open network digital structure for doing e-commerce transaction. Then similarly, it is for the credit enabled network, we have created open credit enabled network OCEN. And along with that, Ayushman Bharat, Cowin, DigiLocker, like many of you who have started using DigiYatra, it is a fabulous experience. Like you just walk to the airport with your face being your boarding pass. So that kind of DigiLocker, which can, so all those things which has happened, FASTag has significantly reduced the logistic bottlenecks. We can straight away drive from the toll post without stopping, giving cash and all. And it has also brought like lot of digitization in exchange of money. Similarly, on economic reform, each and every reform which I talk, like GST, RERA, IBC, Jandhan, PLI, all those reforms are a decadal, and some of the reforms are reforms of the century also. Like GST is one of the reform which has happened during last 10 years. RERA, which has completely transformed the real estate sector. Now people have started and they can trust the real estate players. And IBC is another breakthrough breakthrough reform which has significantly changed the banking sector. It has again given back power to the banking sector to recover back their money. In fact, right now, asset owners are worrying more than the banks, that if they don't repay the loan, their assets will be repossessed by the banks. And that is exactly like last 1 year, if you pick up any bank's PNL, their write back of the provisions is higher than the credit cost. So in fact, and this trend will continue at least for next 1 2 years. And the credit cost, which used to be 8-10% GNPA for the banks, it has come down to just 1-2% even for public sector banks. So that is the power which these reforms has given to the banks, to the manufacturing sectors, to the IT companies in India. Along with this, we have also executed path breaking infrastructure reforms. Like DFC is one of its kind. Like the companies which were in interland, earlier it was very difficult for those companies to export their goods because the cost of transportation from their factory to the port used to be very very high. With DFC coming in, you can move the same goods via rail network using double stacking trains from Rewari to Mundra and very soon to JNPT. So significantly reduce the logistic cost, the way roads, bridges has been constructed, that too at a speed. Like the way all of us in Mumbai, we see Atal Setu and all those which got constructed now, coastal road which takes us after sealing straight to Marine Drive. All those things are, and along with that, we have taken huge initiatives on airport, smart city. So these are, I think, foundation towards developed nation. And also, I would like to cover. I think this is a very very important slide, and we try to summarize the kind of tectonic shift which has happened in India. So we are talking about six tectonic shift, and whenever transformation happen, first thing it should happen in the mind, and then you execute. So the first and foremost thing which we have noticed, that the changing mindset of Indian entrepreneurs, Indian policymakers, and Indian bureaucrats. We have started thinking from incremental to exponential thinking on the development process. There is a sense of urgency in whatever we do. Means it is not a laid back attitude that we have started the commencement of project and we don't know the completion of that. We have started operating at an unprecedented speed, and pace of execution has also gone up significantly. Second is that India is no longer working in a constrained environment. No longer there is a constraint of funds. We are building capacity at unprecedented scale, and none of the projects get stalled because of the lack of funds. In fact, Nitin Gadkari has told this number of times that all of his projects are capable of self-funding, and none of his projects will get delayed because of non-availability of funds. And the most important part is that we are finding our own unique solution. Like I mentioned, that when we created DBT, we have created, developed, or innovated our own COVID-19 vaccine. We have not looked at the Western world and asked them to supply their COVID. In fact, it is reverse. India has supplied its COVID-19 vaccine to the other part of the country, ONDC, UPI, so all those things. And the most important part is the scale delivery at low cost. India has known for its scale delivery at low cost. Look at the telecom in India, look at the UPI payments. So, telecom sector, India is one of the nation where you can get unlimited data just at $2-3, whereas in other part of the world it is upward of $10, and that too limited data. And all this put together has significantly changed the global stature of India and the way we have started getting respect across the world. Let me cover this slide very quickly. Uh, all this has led to strength, scale, and speed. And whenever we see these three things in any company where we invest, it is a magic to us: strength, scale, and speed. What else you need? So, if this thing is happening at a nation level, like we are one of the youngest population on the planet, that is our strength. In terms of scale, we are most populous nation on the planet, that is our scale. And we are building scale in almost everything we are doing, and we are going to be third largest economy for next 50 years. And in terms of speed, we are one of the most aspirational population on this planet. In fact, if I take you to our demographics, India's median age of population is 28 versus 38 of China. We will remain youngest nation on the planet at least for next 50 years. Two-thirds of our population will be a working class, unlike West, where large part of their population is a retired population, which will require help from the working class population. And 25% of the world's incremental workforce will be from India. Huge, right? And if I see what it will lead to, it will not only lead to consumption boom in India. Now, the overseas companies are no longer looking India as a cheaper source of manufacturing, but they also want access to the Indian market, because the kind of consumption boom which is being expected from India. And this we all know, that India is playing a major role in being a factory to the world, in being a R&D or a technology center of the world. So, and I think we are going to become a major manufacturing hub, just like China did in last 30 years. Not only factory to the world, the way the GCCs, global captive centers, are being opened in India, India is also acting as office to the world, one of the uh, preferred destination for all the global companies to have their GCCs, to have their brain in India. And the most important part is India is also going to play an important role on the digital hub of the world. India is going to play a major role on the AI world, in the machine learning world. And whenever we talk to the company, every company is preparing towards that. And all this we are doing in a sustainable manner. We are also going to play a respectable as well as instrumental role in the world's travel to on the ESG side, and we will act as a global influencer as well as a knowledge guru of the world. Now, this is the slide which will be of the interest of everyone, and in fact, after this, I will go into the sectors, subsectors where we are seeing the most of the opportunities in terms of creating wealth over next 10 12 years. So these are the few of the sectors which we have highlighted. Banking and financial services, and within banking and financial services, I will cover few of the subsector as well as few of the segments which are likely to outgrow the banking and financial sector growth. Then manufacturing we have already talked about, but we I will cover in detail. Services exports, here I will cover ER&D and IT services, and definitely consumption in India is likely to grow multifold from here, and all those will be added by world class infrastructure facilities in India. So this is the Amrit Kal period where we are saying that these are the 4 5 spaces where we have tried to identify the wealth creation opportunity. And last 4 5 months our team has done enough groundwork, while and they have done a study of India from 2000 to 23. They have studied various sectors, subsectors, how they have moved over last 20 21 years, and what can be their journey over next 20 years. Hello, am I audible? Hello, am I audible? Sorry, I think there was some disturbance on the other link. I hope I'm audible. Uh, just write on the chat if I'm not audible. Yeah. So, as I was mentioning, that our research team has put enormous efforts in identifying that how various sectors and subsectors have grown over last 20 years, and what can be the potential growth during Amritkal period. And in fact, first time when we have seen that data, it has surprised us also, despite of us being spent that kind of years. Like from 2007, I was into research, but when I have seen this data from hindsight, I myself got surprised that India's total credit has grown from 2000 from $125 billion to $2.5 trillion. And if we start from journey from 2000 to 2023, the journey had lot of speed bumps. Like we have started 2000 with dot-com crisis, 2008 Lehman crisis did happen, and thereafter we had a ILFS crisis, we had COVID, we had like various scams which have like stalled the parliamentary working also. So all those things, if we put together, despite of that, just see the resilience of this country. This country has grown the total credit from 125 to 2.5 trillion, which is almost 20 times growth. If that can happen during this period, our thing is that during Amrit Kal period, whether the credit in India can grow 25x, I think we were very conservative when putting our numbers when forecasting this, but I think I'm reasonably sure that during Amrit Kal period, India will attain this kind of growth. But within credit space, there are few spaces which will significantly outgrow the overall credit space. First one is MSME credit. MSME credit is likely to grow 41x. Mortgage credit is likely to grow 37x. The asset management business where we are in, it is likely to grow 45x. And if I see inferences from other nations which have been traveled the similar kind of journey, their numbers were either equal or higher than this. So with all those things, we are equally confident. Now, next objective is to find out the companies which have got their backbone ready to lend credit to MSME sector, to grow their book on the mortgage side, as well as to grow their asset under management, and as well as I would say life insurance and general insurance. The kind of low penetration which India has, it will also grow multifold. This slide, if if anybody looks like private sector banks market cap in India in 2000 was just 1.5 trillion, which has grown to 372 billion in 2023. Just see that this has grown almost 120, 130 times kind of growth. So what we are saying that this numbers, though 372 billion on a standalone basis looks large, but this number also can grow multifold from here. Similarly, there was hardly any AMCs, listed AMC in 2000, and today we have overall listed AMC market cap is just 15 billion. Looking at the size of the India, this 15 billion is too small, and here we will get immense wealth creation opportunity, especially also small financial banks. Like even today, the entire insurance sector market cap in India is around 131 billion, and it is also likely to grow multifold from here. Some of the interesting possibilities which we try to, if ICICI Bank just grows at 15% annually from where it will cross JP Morgan's asset base, which is 3.9 trillion. If SBI mutual fund grows at 21% annually, which is possible, right? Because market itself will grow upwards of 15%. They just have to capture 6% additional AUM. So it will cross BlackRock's AUM size, which is 9.4 trillion. And if India's asset management industry grows at 18% annually, it will cross 28 trillion kind of AUM. So, which is right now means hardly anything, right? So, all those things are possibilities, very much practical possibilities. Now, let me touch the second big sector, which is manufacturing. So as we manufacturing, if we see India's overall manufacturing size is just 450 billion dollar, which is 15% of GDP. Any country which is having this low share of manufacturing is always vulnerable to external shocks, especially when you have unpredictable neighbors. So that is the reason Indian government is pushing manufacturing in India or make in India to means to a great extent. So and all of means many of the government reforms are targeting to enable manufacturing in India, whether it is PLI. India has significantly improved its cost competitiveness. In many areas, it is even cheaper than China. Like India's labor cost is one third of China now. Power cost is equal to China. India offers lowest tax rates globally for anyone who wants to set up a new company in India for manufacturing, which is just at 17%, including surcharge. And and on top of it, globally we are seeing a shift away from China and Europe to countries like India, China, and Europe plus one. And India's quality standard no longer are days where we were asking that give us something which is made outside India. Now people look at made in India with a great respect. And within these sectors and subsectors, we are seeing immense growth potential in, like, these are the few of the sectors. Like chemical is one of the sectors which covers chemicals, as well as pharma, as well as your CDMO, CMOs. The entire chemical sector size in India is 50 billion. During Amrit Kaal period, we expect this 50 billion to go to 870 billion, which is 19x growth. But as you can see, a large portion of this growth will happen in first 10 12 years. 50 to 330 billion will happen from 2023 to 2035, and thereafter it will just more than double. So the idea is to capture the initial part of journey by betting on these companies which are likely to outgrow even this 50 to 330 billion of growth. Similarly, EMS again will be a big beneficiary. The size of EMS is just 25 billion, which is likely to grow up to 380, then to 1150. So, and same thing in auto, textile, defense, pharma. We are seeing immense opportunities of growth, especially in next 12 years. Services exports, here, like if you see the way India's IT services export has grown from 2000 till now, like from zero, almost negligible, we are at 150 billion of exports. This we are expecting it will grow to 575 and then to 1800. But I think the important part is that within IT services, ER&D is exactly at the same position where IT services was there in 2000. ER&D, we are almost non-existent today, and there is a huge global opportunity knocking on India's door. And there we are seeing immense from zero to $250 billion kind of journey in next 12 years. Like today we are at 47 billion, which is likely to grow up to 240 50 billion, and means many of the companies are aggressively acquiring ER&D companies globally also to capture this opportunity. And on top of it, India will also get an opportunity to participate in Gen I, IoT, blockchain, machine learning, and all. So I think, and Indian IT have grown at 17.6% CAGR over the last 23 years. I think this growth journey will continue. Only one need to identify right segment and right companies. And within services, I will just keep this slide short in the interest of time. So we are expecting, see, whenever the per capita income goes beyond $3,000, then the appetite for investing towards discretionary is much. Yeah. So whenever the discretionary, whenever the per capita income grows beyond 3,000, the the ability to spend toward discretionary goes multifold, and here we are seeing huge opportunities on tourism, space, education, consulting. So these are the spaces where we are seeing huge opportunity. Infrastructure, whatever happened during last 23 years, during Amrit Kal period, we are seeing even much bigger opportunity than this. So this is another space where we are very positive, especially railway, renewables, all those sectors and all. I'm not going through the individual numbers, but the idea is just to highlight few of the segments of the growth. This is, I think, one very important slide. As you can see, the spending class of population, which was 16 plus 1, 17 million in the country in 2005, it has become almost 70 million in 2018. This 70 million will grow to almost 200 million in 2030, and this 200 million will go to 300 million. And these 200 and 300 million numbers are bigger than the population of many of the developed nations. When India will have this kind of population which will be spending on luxury and discretionary items, one can imagine the kind of consumption bubble it will create in India. And means with our youngest and most productive working class population, I think this will further propel the growth. And this is, I think, again, we all know India ranks lowest in terms of per capita consumption. But looking at our per capita consumption of hospital rooms, hotel rooms, air passenger travel, QSR, I think we see enough opportunity of growth in each of the sectors and sub-segment. And if one look at India's profit pool, in 2001, the India's entire corporate profit pool was 8 billion, which has grown to 150 billion. If I have to tell, like in 2001, if I would have told that this 8 billion is likely to grow to 150 billion, nobody would have believed. In fact, I myself would not have believed. Now, going forward, this 150 billion, can it become 1 trillion? I think even on a most conservative basis, it can become 1 trillion. Today's India's market cap is 3.8 trillion. Even if I take a conservative 18x price to earning multiple, this 3.8 trillion is likely to go up to 18 trillion kind of market cap and 40 trillion of market cap in 2047. And that's a huge wealth creation opportunity. And in terms of, like, there are two things which drives the market valuation. One is fundamental and second is liquidity. And what we have done, we have analyzed all global ETFs whose data was available, and we have captured their weightage in on India. So their current India weightage in their portfolio is just 1.6%, whereas India's market cap representation in the global portfolio is around 6%. So these guys are already underweight on the fastest growing nation by almost 4.4%. What we are saying that these guys will be overweight on India, and this will lead to around 1.5 trillion of incremental FI investment in India. On top of it, our domestic savings, which is just 572 billion in India, which is hardly 4-5%, it is likely to go up to 10%, which means additional 2.3 trillion of incremental domestic flows. 2.3 plus 1.5 is almost 4 trillion of incremental flows to India, which is equal to the market cap of India. So liquidity support as well as fundamental support both will put India in a superior growth trajectory, and we believe that premium valuation of India will continue, and India will no longer be vulnerable to external shock. Like gone back are the days when India has pledged its gold reserves to secure foreign exchange reserves. In fact, India's current account deficit, which used to be 4% plus, has come down to almost 2%, and we are expecting in next 3-4 years, India will become sustainable current account surplus rather than current account deficit, which will put upward support to Indian currency and downward pressure to the dollars. And only four countries have traveled from current account deficit to current account surplus, which is Japan, Taiwan, China, and Korea. And we all know that what kind of massive growth has happened in those countries. So this is another thing. And most important part, India is one of the nation which is lowest in terms of leverage, which is having one of the lowest cost of capital. In fact, the gap between India's cost of borrowing and US cost of borrowing has come down significantly. Earlier, it used to be 4-5%. Now it has come down. India has got one of the best ROEs and best growth metrics in the world. So
Sure.
all
So,
this,
sorry to interrupt. So, we're running short of time, Manojji. How much time you will take?
this is last slide. I am done, Vikasji.
Sure,
So
sure,
I will be done within my
sure,
allotted time.
sure,
So this
sure.
is
Please
last
take it.
slide. Yeah. So what we are saying that Nifty 50 in 2035 will be in the range of 90,000 to 1 lakh. And why we are saying that? We expect that if if corporate earning uh, grows at around 18% CAGR from here, which is I think very much possible, and if we assign a 18x ka PE multiple, then that takes the Nifty to around 95,000. And if one compounds its wealth at 18%, if one decides to invest 10 crores today and invest that money during Amrit Kal period, this 10 crores compounds to 450 crores. Just a simple mathematical calculation, power of compounding. So, with this, I think I would conclude my presentation with one of the most touching statement from Bill Gates, that most people overestimate what can be achieved in 1 year and underestimate what can be achieved in 10 years. With that, I conclude my presentation, and over to you, Vikachi.
Yeah, thank you so much. Thank you so much. It was so great presentation, lot of insights, what's happening in and around the economy. So, thank you so much, Manoj, for giving us your
Thank you
valuable
so
time.
much. Thank you so much, and thank you to all the listeners who have patiently listened to me over last 45 minutes. Thank you so much.
All right, thank you. With that, we'll conclude the session here, and then we'll proceed to the next one. Thank you once again. Bye bye.